Great. Welcome, everyone. I'm excited to be moderating this panel. Quick introduction about myself. My name is Ken. I'm the author of Generational, which is a Substack publication about what matters in the business and technology of AI. If you're interested, check it out, generational.pub. But since this is a VC panel, putting on the investor hat, I'm also a venture partner at the fund called First Hand Ventures, invest in pre-seed and seed stage B2B software companies. But enough about me. I'm very fortunate to be joined by three amazing investors. I'll do a brief intro. First, Alex. Alex is a partner at Lightspeed Ventures. He and his fund have invested in companies like Glean, as well as Intensi, which uses computer vision to help employees with their health and safety. And then next we have Kany, partner at Kholsa Ventures. She and her fund have invested in Poly AI, which is an enterprise voice agent, and also OpenAI, which everyone knows about. And then lastly, we have Shravan, partner at IVP. He and this fund have invested in the more popular or the most popular search companies right now, Glean and Perplexity. But my introduction does not do justice to their experience, so I'd like to open up this panel with an introduction by the panelists themselves. Maybe Alex can start, then we can go Kany and Shravan.
Great, sounds good. Hey everyone, great to be here. I joined Lightspeed last year, one of the partners on the team. As a firm, we've been investing in the enterprise space for about 30 years. The firm got started back in '99, so it's been a really fun few years, just given all the developments in AI. I think the level of excitement and optimism at the firm, there's just a lot of buzz. As a firm, obviously, we've been long investors in AI, but in particular, the last few years have been really exciting. I focus particularly on the application layer. I'd been at Salesforce for 8 years before joining the firm. And so really excited about the innovation that we're seeing, real business use cases, and some of the sort of hard problems to be solved for CIOs, IT decision makers at the app layer. And so happy to chat more about that.
Hi, everyone. I'm Gulati, very excited to be here. I'm a partner at Kholsa Ventures, which is a multi-stage fund, but our sweet spot is coming in early in bold and impactful ventures. The fund is fairly generalist, but we like to back companies that have an advantage in a technology or a business mode that can then be parlayed into a business advantage. My background, I have a PhD in EE, focused on speeding up software using hardware, and I soon realized the only thing most interesting to speed up on hardware is AI, and for the last decade have been focused on just that. I focus on applications, including robotics applications, because increasingly those are using AI techniques, and also some infrastructure.
Hey, I'm Shravan, partner at IVP. IVP has been around about 44 years. We're more of a venture growth firm, so slightly later than they will invest occasionally. And for me, I was at Snowflake before this, and I spend most of my time in infrastructure software.
Great, awesome. So let's kick off the Q&A portion. I think since this is a VC panel, I want to structure it like how VCs think, always weighing the opportunities versus risk. So we'll start with the opportunity section and then the risk section. So on the opportunity side, typical question that you probably get asked a lot, what's the most exciting thing now? And then what is your quote-unquote request for startups at this point?
I can kick us off?
Yeah.
So I guess on the request for startups, I think where we get excited today is where founders have a real deep sort of domain insight, and they're really solving a business problem, not just sort of a technology. I think in our experience, when you have a really innovative technology like we have today with AI, it's not just about sort of the buzzwords and trying to think about how cool the technology is. It's really trying to translate that into business issues. And so you talked about Intensi as an example. Computer vision has been obviously a really exciting technology, but what they're doing is focused on preventing health and safety accidents. And so today that industry is really used to pen and paper, folks walking around factory floors, manufacturing facilities, industrial settings. Something like 3 million people die globally every year from workplace accidents. And so instead, Intensi is able to come in and plugs into existing cameras and provides 24/7 alerts. Their computer vision models are never tired, they never not pay attention, and there's this always-on technology that's solving a really hard problem. And so it's that combination, I think of not only is it a real technological edge, an advantage in terms of what they've been able to bring to the market, but there's a real business case, fast ROI, a big market opportunity that gets unlocked. So I think that's one thing that we get really excited about right now in terms of the ask for founders. And then on the first part of your question, you asked what's sort of super exciting. We've been spending a lot of time at vertical application software. There's just a real opportunity today, I think, in the market to identify whether it's in legal, in healthcare, in retail, what are sort of the new business models and how is AI going to really fundamentally change some of these industries. As an example, we were an investor in EvenUp on the legal space, and what that company does is in the personal injury law domain is able to sort of generate demand letters for law firms and really accelerate how quickly they can serve clients and get to resolution. And so just a fundamental sort of reimagining of how that industry works that's been powered by AI.
Yeah, I would add on to that. We are excited about applications across different industries, across different functional aspects within the enterprise, and rethinking and reimagining how the current capability and future capability, which I think is even more important, that imagine if your models are going to be beyond the high school grade level, but coming up to, say, a PhD level, or the combined brain power of an OpenAI, what can be enabled, what can be reimagined in terms of the enterprise? To give you an example, we are investors in a company called Cognitos, which is reimagining what RPA can look like, because it can allow business users to lock business logic in without needing any tech support or any developer time. And that completely changes what an industry could feel like. So we're very excited about reimagining different industries, different verticals. But that's not all. In addition to LLMs, we are also excited about what's beyond LLMs. We don't think, we are obviously, we're investors in OpenAI and Sakana, and we think they are here to stay, and they are going to be very powerful and continue to provide a lot of leverage to a lot of different applications. But we are also in the camp that there will be different kinds of intelligences that we should continue to fund. And we are investing in or looking at other neuro-symbolic techniques and beyond. So very excited about those and encouraging founders to look beyond even LLMs now.
We're a generalist fund, so I'm only going to speak for myself here at IVP, but I tend to focus mostly on infra. And for infra, it's actually, with one notable exception, we're mostly focused on general purpose infra that has an even more compelling why now because of how the application stack is changing. That being said, there's actually a lot of stuff I'm personally very passionate about on the creativity and curiosity front. So if you think about, if you're curious about a subject, the best place to go, in my opinion, is Perplexity. If you're curious about a subject internally and trying to understand how you can better do your job, you go to Glean. And creativity, there are dozens of tools out there, we haven't invested in them, but that are doing an amazing job of translating what's in your head into paper or design or screen, so to speak. Maybe more on the personal front, I have an 18-month-old, and so one of the things I'm really passionate about is, are there going to be a set of products that are not screen-based that emerge that can really drive a curiosity revolution among kids? Maybe that's a product like Curio and what they're doing on the toy front. Maybe there's going to be an AI-enabled Etch-a-Sketch, but that's stuff that's maybe my personal request for startups.
Awesome. Okay. So we talked about what's exciting for all of you now, but I want to do time travel back to maybe early 2023, because it hasn't even been 2 years since ChatGPT was launched. But the space has evolved really, really fast. And I think it's only been a little bit over a year since GPT-4 was launched. So take yourself back then. What was exciting to you back then that probably at this time isn't as exciting? How has your thesis changed over that time period? Open it up to anyone. Oh.
I can kick us off in that answer. So we've been, because we were fortunate enough to be the earliest venture investor in OpenAI, we've been tracking that space very carefully, very closely. GPT-2 came out in 2019. GPT-3 and ChatGPT really made the news. That's when people got really excited about the emergent capabilities that come from scale. And I think there's a lot more to be seen about what can be done with scale, and so we haven't stopped there. But going back then, I think we were just excited about how, what can the creative writing experience be? And we were looking at a number of applications that can be powered, including code automation. It was really, really early. We were one of the earliest investors in a company called Replit, which started with enabling the citizen developer to create complete applications. And the part that I continue to get excited about is building companies are building applications that can continue to leverage and take advantage of improvement in underlying LLMs. So there should be an informed opinion on, and we should try to do our best in informing that opinion on what GPT-5 or a GPT-6 or a GPT-N could look like, and build applications or build our companies with that in mind. So that's the ongoing trend that I continue to be excited about, which started off with GPT-2 and GPT-3, and it's going to continue and creating just more empowered applications for us.
Maybe in contrast to Kany, there's a reason I'm not an early stage investor, which is I tend to be a little late to the game. And so I was not aware of GPT-2, I was not tracking all that sort of stuff. That being said, I've worked in companies where we were trying to bring machine learning into the enterprise over the past decade. And so I was blown away when I first used ChatGPT, but I still think I had a little bit of that scar tissue of the difficulties and barriers to adoption. And so I was actually more on the skeptical side, very incorrectly, about how quickly enterprises would be adopting AI technologies, how quickly they'd be redefining their stack, how quickly they'd be redefining their workforce. That is something I totally underestimated. So that's been really fascinating to see.
Shravan, I actually think some of that skepticism is well-founded, and I think, so to answer the first part of your question, I still remember that first time you typed into that chatbot and you sort of got that response. It felt magical. It reminded me of the very first time I sort of connected on AOL and post dial-up speed, and you sort of click on a website and it took 45 seconds to see a little banner. That felt magical. The first time you had an email on this thing called a mobile device that you sort of had in your pocket, and you're like, oh my God, I can't believe I could sort of do this on here. There was a real moment of magic, and I felt similar when the first time using one of these tools. And I think the thing that's amazed me the most is just the zeitgeist, how quickly, you look at the speed of which, we back companies like Anthropic and Mistral, and how fast customers are adopting it. Having said that, I think your instinct of like security, privacy, data governance, like those are hard challenges. And I think we've crossed that point now where we're outside of the sort of the wave of optimism, and now the rubber really needs to meet the road. And I think IT decision makers are really figuring out how to actually deploy these systems in production, because they're cool and fun, but we also need to drive business value, and we also have to do it in a secure and safe way. And so as a firm, having invested in sort of the infrastructure layer, we're also investing a lot at the tooling layer, giving companies, whether it's companies like Petronas on the sort of governance side, or Exa on the sort of search side, really helping create the tooling infrastructure to build that trust, because I think that's needed now.
Yeah. And I want to piggyback off of that on tooling. This is a question for Shravan, but Kany and Alex as well, all right? So Shravan, you've worked at some of the most iconic infrastructure companies, Snowflake, as well as Confluent. You've also invested in some of the AI companies that have seen the scale and adoption that Alex was mentioning, Glean and Perplexity. What's breaking at the infrastructure layer? What's new there? And Kany and Alex, what have you seen with companies you're involved with as well?
I think it's hard to say things are breaking because so much is new. I think things are just being discovered in terms of how to actually build an application that scales in a very different way than prior applications had to scale, whether it's a reliance on external models and infrastructure versus internal, whether it's how you have to orchestrate different models together to get the best performance, things like that. I think there's some very known problems. You heard probably earlier from Anyscale also about scaling and how do you reliably serve models in production. We're investors in a company called Base 10, which does that remarkably well as well. So it's hard to say that anything's breaking, because I think the reality is just not much is actually in production at scale in large enterprises. So there are lots of techniques people are going for, whether it's RAGs, LLMs as judges, evals, guardrails, things like that, to try and get ahead of some of these problems. But I think there's still a lot of the phase of we don't know what we don't know. And I think that'll start to change probably over the next year or two as people start to get things in production, realize what breaks, and then figure out a lot of infrastructure around it. That's, I think, why we've also been a little bit more patient on our AI infrastructure investing, is we wanted to wait for applications to reach scale for those problems to become a little bit more known before we then started making some more bets.
Yeah, for us, the ML ops or LLM ops category has been a harder one to invest in, because it's hard to see how does a company at the scale of a public company like a New Relic or a Datadog can exist for just doing, say, one very small portion of LLM ops, like say just observability or just evals is hard, and similarly you mentioned some other areas like RAG. I think there are two challenges. One, you don't want to invest in anything which is very, very adjacent to what the model providers or a model hub can build, because they just have immense mind share, they have the right capability, they're seeing what sorts of use cases the developer community wants to build, how they want to use it, and they have an advantage there. So as a startup, you don't want to build something that's in the roadkill of one of the large model providers. And at the same time, you have to go after a large enough, interesting market. And sometimes if you only focus on a very tiny vertical because it's niche, you can win that market, but then where? And so we've been looking, we continue to look. We've done model providers more easily, but in order to look at LLM ops, we're continuing on the hunt. So very excited to meet founders to help us refine our thesis here.
Totally agree.
Yeah. I think one of the things that interesting I picked up on is like you're waiting for applications to scale, see where things break, and then look at what infrastructure is required. So Alex, you've written about SaaS 4.0, and you mentioned this is the 4th generation of software applications called the system of cognition. I guess maybe for the crowd, for the audience, can you elaborate more on that? And then the thing I'm curious about that, attaching a second question to it is like there's a growing refrain, rightly or wrongly, that AI is a feature, not the product or capability or a company. Curious how you kind of mesh those frameworks and that refrain.
Yeah, for sure. So the sort of era of cognition, quite simply, is really software going end to end. So if you look at, I mentioned I was at Salesforce before, back in '99, Salesforce really pioneered the shift to the cloud. Maybe we call that sort of SaaS 1.0, when you had on-premise applications that then became cloud-based, you can access them in a browser. 2.0 was this sort of explosion, the number of SaaS applications from sort of the 2005, 2015 era, if you will, and more of these systems started talking to each other. Companies like MuleSoft and Slack really embodied that shift. And then 3.0 was sort of this early sign of intelligence where companies like Gong and Moveworks really started doing next best action, and it sort of felt like the tool had some insight and visibility that was helping the human do their job. I think what we're about to go into is this sort of really the ability for software to go end to end. Whoever thinks it's a feature, I really would disagree with. I think this is one of the most fundamental transformations we're going to see. And I think what's interesting, when you talk to customers who are buying these tools, they really think about it about not just sort of IT spend, but about sort of actual labor spend. And I think the size of the opportunity, a great example is we've made an investment in a company that helps automate manual data entry. And for most people, that's a very repetitive, time-consuming, laborious job. They would much rather be focused on meeting with a customer. Another canonical example of this is a company called The Bridge. Doctors spend 2 hours a day typing up notes at the end of the day. It's one of the biggest reasons for burnout in the medical profession is just how long it takes them to type these notes up. And so wouldn't it be amazing if they just had this sort of device with them that recorded, transcribed everything, auto sort of summarized the note for the patient, created all the next steps, and the doctor can do what they do best, which is really, sit in front of the patient, figure out what's going on and how to help them be healthier, as opposed to sitting there thinking about notes and the administrative part of their job. And so that's where we get really excited about this sort of era of cognition is, what are those tasks that today have just been unencumbered? And these reasoning engines are at the point now where they can actually decide and do next steps and drive that automation end to end. And so I think I've been investing in technology for about 15 years. I have never been more excited about sort of the opportunity set, just because it feels that we're at the cusp of this sort of revolution.
Yeah. And there's
another way to look at the space, I would say, or we talk about it internally, is a co-pilot and an autopilot, and there is multiple applications where both could be really large opportunities. For example, a GitHub Copilot, which helps make an engineer 10x their performance or productivity, that helps a professional with just improving their output. On the other hand, there is an autopilot mode where you can get the tasks done end to end under still some human supervision. But for example, I'm an investor in a company called Reggie, which automates the sales SDR activities. Everything from the initial reach out on a cold email, figuring out how to personalize, figuring out look-alike accounts, all the way to the surround sound from LinkedIn messaging to all of these actions are now being taken by AI end to end. And there are multiple examples. I think it becomes very important to understand where the advantage comes in, where does the data flywheel come in, and what allows for a bigger, larger opportunity in that particular vertical for that particular market. But there is room for both co-pilots and autopilots. That's another way to think about the opportunity here.
Got it. And we have a couple of minutes left, but I think you mentioned data flywheel. And that's often the term a lot of investors use as a way to kind of figure out whether how to evaluate a startup. So I want to jump into the risk portion, given the couple of minutes we have left, is there any difference between how you evaluate and diligence a AI startup versus a non-AI startup? Curious how you even define AI versus non-AI in this front. Maybe I'll start with that.
Yeah, I can share some quick thoughts on that. I mean, I think the sort of hardest thing right now when we're meeting new companies and making investment decisions is really just the pace of change. You know, you talked about how it's only been a couple years. I mean, it's kind of incredible what we've seen in the market since then. And so we think a lot about durability, about the company's ability to sort of drive, and it's not just incumbents that have an advantage because of the sort of existing go-to-market reach and their existing customer relationships. It's also just the number of new entrants that are coming around. And so we are looking for what are the moats. Historically in software, execution was oftentimes one of the best moats, and then you drive workflow to drive stickiness. I think we're at a point now where we need to look beyond that, and we're looking for places. The reason vertical SaaS I think is so interesting is typically like a horizontal player like a Salesforce will not think about that vertical as a sort of core part of their business. They're very focused on serving all customers, and so if you can start with an initial wedge that is really interesting and might not be sort of noticed by one of the bigger incumbents that have a go-to-market advantage over you, you can sort of drive durability and then get to the point where you have your own sort of data flywheel or technology flywheel, and you earn the right to grab that next sort of milestone. So I think what's been amazing about this era is, you look at Salesforce, Microsoft, Adobe, ServiceNow, just how fast they've innovated. I think, in the prior, when it was cloud, on-premise to cloud, and then the mobile shift, a lot of those, it was new companies. And actually, I think the incumbents have done a remarkable job. And so, really think about what are those vectors of differentiation. And you can't just build, as much as we love sort of our investments in Anthropic and Mistral, you can't just build and just ride those tailwinds, right? You have to sort of think about what is your own IP that you can develop.
I'll probably add just one thing to that, which is that it is easier than ever to start a company. It's harder than ever to scale a company because of that competition. And so the level of creativity you have to have from a business model standpoint and from a go-to-market standpoint, how you acquire users, how you resonate with people it's so much harder than ever before. So I'm a VC, I don't know what people should do, but I think there's a lot of really exciting things. Like, I think I'm going to come back to Perplexity. You see some of the creativity they have with their ads, how they're partnering with telcos to get distribution, things like that. Those are the types of things you have to do in order to really stand out right now. It's still fully conditional about having a magical product experience, so nothing replaces that. But I think it's easier than ever to build a magical product experience, which is the trade-off.
Yeah. I agree on the incumbents have a distribution advantage, and that's hard to mimic just by using LLMs. But I think there's a lot of opportunity in reimagining completely different approaches. For example, we've invested in a company called MoonHub, which is building a recruiting agency themselves. So they're not providing, say, just recruiting software or an ATS for an inside recruiter. They're changing and becoming a recruiting agency themselves. And behind the scenes, a lot of the digital tasks are being automated end-to-end by agents. And internally, their margins are getting better as the next set of models keep getting better. But now the business model is completely changed. And I think all of you are way more creative and will come up with new companies that we will want to, fight amongst ourselves to invest. So I'm not concerned that there is no opportunities left or there is nothing. I think people are just very, very creative, and there's a huge amount of a wave of companies that's going to come, and we're in the very early innings of what this AI wave is going to get us.
Okay. I have a ton of questions left, unfortunately, it is time, but I'm going to sneak in one more. Each panelist give a hot take on AI, and answer should be 30 seconds or less, and then with that, we'll wrap up the panel after that. Alex, you can go first.
I can start. Yeah, sounds good. I think so. If you look at my hot take is just how quickly it's going to take to build trillion-dollar companies. If you look at today, there's Microsoft and done an amazing job, and Apple. It's sort of the $3 trillion plus mark. These companies have been around for 50 plus years. Sometimes 30, 40 years. I think we're going to see a $1 trillion company in AI in the next 5 years. And I just think the pace at which this innovation is coming, I couldn't agree more that we're just at the very beginning. And it's just such an exciting time. And so the pace, we all are used to technology moving fast. I think we're in for a wild ride. So I would say buckle up.
We hinted on this before, but yes, because of the pace again, I think the underlying capability from the models themselves is just improving at just even faster rate. So now, from a high school student to this PhD level reasoning to maybe the combined brain power of a research lab, I think my hot take would be just focus on building companies that can leverage that growth. And not plan for what's out there today, but what will be in the next 2 years or 5 years.
For me, I don't think co-pilots are generally good strategies. That's my lukewarm to hot take. I think speaking for enterprise startups, I think co-pilots are best for incumbents or for products that have really shitty UXs. So instead, if you just build, if you have a great product, a co-pilot oftentimes slows you down. And so focus on that, which I know is a standard VCism, but I believe it.
Yeah, awesome. We are out of time, unfortunately, but if you have questions for the panelists, they may stick around right after the panel. With that, thank you, Alex, Kany, and Shravan.
Thank you, Kenn.
Thank you.